Welcome back to Stockwatch, and joining me in the studio live is Andrew Lee and Suhaimi Illias of Maybank Investment Bank. Now, before the break, we were actually discussing the impact of Budget 2010 on the certain stocks and sectors of the market, and we were discussing consumer banking. Now, Andrew, I believe you have more to add about how the consumer banking sector is going to be affected by the budget.
Yeah, I think banks overall are going to benefit from the budget. There are a number of other measures. For example, banks have a certain tax exemption for overseas branch activities, and that tax exemption has been extended, and that's clearly going to benefit banks which have activities or have started activities, banking activities overseas recently, and some of the larger banks in Malaysia have done that. The second thing is that I think the Prime Minister mentioned that there's going to be a second wave of privatizations of certain government entities, and obviously that will give rise to some investment banking activities. So banking groups with very active investment banking units are going to benefit as well. And the third thing is that because of a drop in development spending, some of the funding for development spending may move on to the private sector. So that again will give rise to funding and banking activity for the larger groups who are involved in large-scale infrastructure funding activities. So broadly speaking, I would say that all these factors would benefit the larger banking groups, like Maybank, like CMB, like RHB Capital. These all have fairly active investment banking units. They have overseas branch banking activities, and they are clearly very active also with large-scale infrastructure project financing. So we will see more corporate wholesale banking activity by these banks, and I think they will benefit in the medium term from these new measures.
Okay, fair enough. Moving on to the construction sector now, Suhaimi, I believe before the budget, you did actually have a few reports on the construction sector saying that you hoped a few major infrastructure projects would come online in 2010. Were you actually disappointed or surprised by any of the announcements on those projects in the budget?
I think, although at the start I mentioned that one of the key surprise in this budget was the reduction in government development spending next year, but actually the allocation for construction spending for next year is still sizable. At least government is putting aside something like 9 billion ringgit in total for various infrastructure projects, mainly on the social infrastructure. Another 3.5 billion ringgit for infrastructure in the regional economic corridors. And I think what is also interesting is that while the government is actually cutting its development spending, it actually tried to undertake some of the infrastructure projects via private finance initiative. So because of that, I guess the impact on the construction is actually not going to be bad. In fact, if you look at the forecast by the economic report that comes along with the announcement of the budget, construction sector is still expected to grow at above 3% next year, just as this year. So growth momentum is going to be sustained. And in fact, I think late this year, early next year, we should see more announcement in terms of some major projects going to be implemented, such as those involving raw water transfer between the state of Pahang and Selangor, the extension of the LRT within the Klang Valley. I mean, these are sizable projects that will have some positive knock-on effects on the construction sector, as well as some other sectors like building materials within the manufacturing industry.
Okay. Now, very quickly, we'll just touch on auto before we move on to the budget deficit. There's going to be a fuel subsidy management system, from what we've heard. Very sketchy details for now. But which companies are most likely to benefit from the this kind of system? Andrew?
I think the fuel subsidy system is probably going to, the way they're going to do it is probably going to target the lower cylinder capacity cars to benefit from to a greater extent from the subsidies. So I guess the smaller capacity manufacturers and assemblers, which would be the Protons and Peroduas of this world, so the national cars. But there are a number of non-national car players which also have smaller capacity cars. But I think by and large, in terms of market share, it would be Proton and Perodua that will benefit.
Okay. Now, very quickly to round things up, of course, the government expects to deal with the deficit by hitting a target of 5.6% of GDP. Suhaimi, is this a realistic target?
Well, it's an aggressive target, trying to slash budget deficit from 7.4% this year of GDP to 5.6% next year. While I do expect there will be reduction in budget deficit next year, we have to be mindful of some risks that may necessitate the government ending up having to spend more than what they're targeting. For an example, despite the target to cut development spending, if the global economic situation next year takes a turn for the worse, there may actually be the need for the government to maybe accelerate or front-loaded some of the spending that perhaps were targeted for 10 Malaysia plan, perhaps to start as early as next year. Another concern to me is this fuel subsidy management system. There is right now a situation where crude oil price is rising. So the question is, if there's going to be a resurgence in crude oil price, this could be what you call a test of political will on the part of the government to review its fuel subsidy. So it will be interesting to see how the government going to deal with that should the crude oil price were to shot up quite fast from where it is now.
Well, interesting times ahead. I'm afraid that's all the time we have for our interview today. Gentlemen, thank you so much for being here with us tonight. Now, we've received so many questions from all of you, and unfortunately, we can't answer them all. We will, however, try to get Andrew and Suhaimi to answer your questions privately. That was, of course, Andrew Lee and Suhaimi Illias of Maybank Investment Bank joining us live here in our studio. Thank you again, gentlemen. And with that, we come to the end of Stock Watch for tonight. If you have any questions about investing that we can help you with, please don't hesitate to email us at stockwatch@tv3.com.my. Also, don't forget to catch any interviews you may have missed on our show at our new blog, stockwatchproducer.blogspot.com. On behalf of our team, have a great investing week ahead. Until next week, same time, same channel. I'm Shani Manli. Good night.